Well, Steve, we're here in Columbus, Indiana.
Welcome to Indiana.
Thank you very much. We just wrapped up the 69th seminar for ACT Research, and it has been fantastic. We had a great group of presenters and panelists this week, and I learned a lot. How about you?
I always learn when I'm at these seminars. Oftentimes I'm also presenting, but for this particular seminar, one of the things that was, I think, different that sets it apart from some of the other ones is we started to get some divergent points of view on some different topics, right?
Yeah, we did.
So we always kick off the seminar with an economics panel, and some people might think that's boring, but this was actually pretty exciting.
No doubt.
It's amazing that you can have different people looking at the same data and coming away with strong conclusions that aren't necessarily the same. So this economy is crazy, right?
Yeah, it is.
We've got, I talked about this, right? We've got the Atlanta region of the Fed saying we could see 5% GDP growth in the third quarter. And yet we still have economists that are out there forecasting that we could go into recession for the year in 2023, not 24, in 23.
Yeah, right.
And it's like, how does that happen?
Yeah, it's confusing. I think at one point someone asked the question, can I have a raise of hands of all of those who believe that we're heading into recession? And about half the room raised their hands. And the next question was, okay, how many of you think we're not going into recession? And about half the room raised their hands. And then the last question is exactly where I fit. And that was, how many of you are just confused? And
I raised both hands.
Yeah, I know. It's crazy. It is, it's a little bit of a mixed bag, no doubt about it. And the indicators are certainly pointing to recession in some areas and then not in others. And so, look, one of the things that we always talk about in our business is that's something we can't control. But there is something that we can control, and that is the next thing we do, right? And so we're just going to continue to do that, and we'll weather whatever happens or doesn't happen either way. And I think that's where most people fit, right? They're just going to continue working and doing what they do. And yes, there will be moments when you need to make adjustments, and that's fine.
That's exactly right. And, I think it's important, too, to understand we call it rolling recession or sectoral recession, right? So understand which portions of the economy are struggling, because some are not. Some are doing well.
Right.
So if you think about it, the freight side of the industry is where some of the softness is now and is expected to be, and that's kind of related to the manufacturing side of the economy. But on the services side, there's some pretty decent growth, above trend type growth, and the prospects, I think, are pretty much uniform for things to stay that way.
Yeah.
And so, you start to think then about, in our industry, about the vocational markets, right? And they're a lot more stable. They might see some softening, but they're not likely to see contraction, at least based on the forecasts, the unit forecast for vehicles that we're looking at.
Absolutely. So, and, we, and you know this, we finance anywhere from class 1 to class 8, right? We kind of run the gamut. And what we do inside of those markets and those segments is we put our money where it's needed the most. And we certainly continue to lend in all of those classes and in all of those segments. But certainly right now, the freight-centric segment has been challenged a little bit, even though you see Class 8 tractors, year over year, not performing horribly.
No.
But a lot of those trucks have fleet names on them, and for us, we certainly finance fleets, but we also finance that owner-operator segment, the small fleet, medium fleet, and large fleets. The mega fleets, they don't need us so much, but we're in that whole space, and so we get the ability to pivot where we needed.
Yeah, that's what you got to do, right? Balance your portfolio or diversify, and to your point, go where the growth is, go where the need is, and there's opportunity everywhere,
Yeah.
or at least somewhere, right?
Yeah,
and so
exactly.
focus on the customers that you can help, and away you go.
No doubt.
Yeah.
One of the conversations on the economy that I really enjoyed, I think it was Jim Meal was sharing with us about how, to some extent, the banks, the liquidity from banks for the mega fleets, I'll call them, has dried up a little bit, but it's been okay because those big mega fleets have a good cash position. They have had a good cash position, and so they've been able to fund some of their own internal needs versus going to borrow money from a bank. And that's where one of the examples of where synthesizing what you hear in these conferences, these seminars, with your own business is important. And I'll give you an example here. That is most likely absolutely true in the market, right? But because we're in that owner-operator, independent, on the Class 8 sleeper truck side, segment, and the small fleets and the medium fleets, well, they don't have great cash positions. So they can't just fund their need for equipment.
Right.
And that's where, independents and captives come into play. But there are a few banks out there that are still in the market lending money just like we are every single day. And so I think it comes down to a good measure of expertise in that particular segment. And if a bank has that level of expertise, we still see them in the market.
Sure.
It's not like they just dried up and went away.
No.
We
no.
still see that bank lender in our market.
Yeah, no question. Capital is available.
Yeah.
Maybe not as much as before,
Right.
but it's still available.
Right.
It's a little bit more expensive, right? So we're in that inflationary environment, and that's one of the things that's driving costs
That's right.
is higher interest rates. But we're able to survive. You're looking for long-term operators, folks that know their business and have a solid book of business.
Yeah.
And they're going to be here today. They're going to be here tomorrow. They're going to be here next year. Those are the relationships that you build and foster and continue to support. And sometimes you have to support them when times are tough, and then they support you when times are tough for you.
That's right.
If that
That's
ever
exactly
happens.
right.
Yeah.
That's exactly
Yeah.
right.
Yeah, it's a two-way street.
Yeah, Jim always brings a great message for us. I mean, maybe the news isn't great, but he does a fantastic job of that. And then David also, great job on his economic slides. Again, maybe a slightly different view on how things are positioned, but I think it's good for us all to see differing perspectives. And then we just have to make a decision about our own business, whatever that may be, how we're going to respond.
Yeah.
But this is a great place to start.
Yeah.
With this information.
That's right. You give the assessments, you explain the whys behind it, and then if you've got different thoughts, if your customer base looks different, you adjust, you adapt accordingly.
That's right.
Good point on David. One of the things that he pointed out, and it's something that we've been watching for a while, is the stimulus money that went into the economy post-COVID is a waning pool, right?
Yeah.
And we're getting down to the point where we've just about put all that money back into play. So, and that makes him nervous. Well, I don't share the same assessment. I understand that that's going to slow things down, but that money's in the economy.
Yeah.
So now it's going like this, right?
Right.
It's not just coming in for the first
Exactly.
time.
Yeah.
And then I made a comment about this. The other thing that he didn't address when he talked about that is, where is the consumer balance sheet, right? You talked about the business balance sheet. Businesses have been socking away their profits for a couple of years, and so they're in pretty good shape. But where is the consumer balance sheet?
Right.
And I don't know the answer to that, but I mean, if I just look at myself as a microcosm for a representative of the consumer, I've got a lot of equity in my house.
Exactly. Yeah.
And so if I need to tap that equity, I've got the ability to do that. So I think I know for a fact that consumers are not nearly as leveraged today as they have been in previous cycles. And so they've got those resources to be able to draw on.
Right.
And that to me kind of buoys my view of the economy and us staying out of recession this year or next year.
Yeah. No, and look, believe me, I don't think there's anyone that would want to disagree with you on that. I think we all want to see a good soft landing and just up from there.
Yeah.
So.
Yeah.
One of the other, and I guess this may have been a highlight for me in the last couple of days, is the presentation that Rick Dow gave on Workhorse. And while Workhorse is a new sort of, not quite new, it's newish startup in the electric space, it was so refreshing to see the transparency, the level of transparency that he was bringing to the conversation. And I think it was much appreciated by everyone in attendance. It was great perspective that he was giving us on that market.
Very, very refreshing. So a lot of the folks in the marketplace, it seems, there's just been a lot of hype over the last, let's say, 4 or 5 years about electrification of vehicles. And that's not necessarily a bad thing, right? It's attracted a lot of attention. It's attracted a lot of capital and investment, which is something that we really need because we need to develop this technology, right? Yeah. There are a lot of moving pieces that we don't have in place yet, but that we're starting to put in place. But I think kind of what his presentation did was say, hey, yes, but, right? Yeah. And that's that but is the thing that we're all dealing with right now. Yeah. Here's 5 hurdles that you're going to have to overcome before you're going to see greater rates of adoption of electrification. Yeah. Well, I think we have the circle drawn around those hurdles. I think we know where the challenges are and where the homework is. Yeah. Now what we need to do is, and we're starting to do, is make that transition. Okay, how do we overcome these hurdles? Yeah. How do we put them in the back seat and start jump-starting, no pun intended, the acceleration of adoption of electric vehicles. Yeah. And so it's early days.
It is.
And that's the case with any new technology in this industry or any industry. But the interest is there, the need is certainly there.
Yeah, no doubt.
And,
no doubt.
We're going to make progress.
We are.
It's not going to be at light speed, but...
Yeah, he really sort of opened the conversation around all of those challenges, and yes, he has a plan for getting around that. But then, when you think about some of the other technologies that could come into play, it gets a little foggy.
Yeah.
Hydrogen is there. Some people don't think it's going to amount to much, but it's definitely there. And the utility providers and actually providing the infrastructural development that needs to happen. Right. I can't remember the gentleman that gave the presentation on the corridors and the development of that infrastructure. I can't remember his name, but it was great. It was a wonderful and logical approach to getting the infrastructure in place that we need in order to take advantage of some of these clean energy vehicles.
Right.
So,
yeah.
Good stuff.
Very good stuff. Yeah.
I also will add this. When later, I think it was today, when Tim DeNoyer was covering down on the freight aspect of everything, you and I had this conversation a little bit, and that is, in that, because we finance all segments, I'm listening to everything all of you say. That Class 3 segment has certainly grown in its market share size over the last 10, 15 years.
Sure.
And but there's an aspect of that segment even that it's a little different, but it's still freight centric, right?
Yes, right.
It's not tied to the spot market like Class 8 sleeper trucks and owner operators and people that are doing that. But there's definitely that aspect in that class of vehicle from a commercial perspective, and they're serving freight. And so we need to get our arms around that and understand it and know right now, and to your point during the conference, there's really no measurable difference in that segment in terms of its stability. Even though there is some freight-centric units in there. Yeah. But I think I think we need to understand that.
Yeah.
That's just my gut.
Yeah.
I could be totally wrong.
No,
by the way.
I don't think so. It's just a very different market. It doesn't function the same way.
Yeah.
Part of it's a business to consumer market, right?
There you go.
So you get kind of the home delivery aspect, the parcel delivery aspect. But a lot of it's that small business owner, right?
That's right.
So I refer to him as the butcher, the baker, and the candlestick
There
maker,
you go.
right?
Yeah.
So I don't care about trucks. That's not my thing.
That's
I,
right.
I bake bread. I provide meat to
Yep.
the masses, or I
Yep.
make candles, and I've got to get my product from wherever I do that
Yeah.
to wherever it's going to be consumed. So
that's right.
and so they fly under that. They're not.
Yeah.
I'm not buying for hire carriage. I'm
Yeah.
not even a private fleet necessarily.
Yeah.
It's just a different animal altogether. And
They don't need a
hard to quantify.
53-foot trailer to haul their goods somewhere. And the other aspect of that market is, you have services, plumbers, electricians.
Exactly.
All the private sector type, people who are using the vehicle, but it's not what is generating the revenue. Their services are what is generating the revenue.
Exactly.
So,
Exactly.
it's a neat world that we are in. When you get to look at it from class 1 to class 8, it's very exciting.
Yeah.
It's very exciting.
Yep.
So
Lots going on. A lot of moving parts.
So let's see, what else? What was one of your another of your favorite moments this week?
Yeah, so I always enjoy the conversations that center around technology and the technological development. So it wasn't really the focus of the conference, but because those are some of the things that are taking place in the space right now, you just can't avoid or you can't help but talk about them. So autonomy was another topic that we broached. We didn't do a deep dive on it, but just looking at the levels of technology that are in play today, and we've got if you look down kind of in the level 2 area, we're in 3rd generation technology and 4th generation in some of the things.
That's right.
And those are what I refer to as the building blocks of autonomy. It's the safety pieces that are going to be just absolutely critical to the foundation of any continued advancement that we have in the space. And so hearing the commentary around that, where we are, how it's being employed, to me is really exciting, beneficial, useful.
Yeah, and it sounds like it's probably a ways out there before we see a bunch of autonomous trucks going up and down the highway. And most of them will probably be in my neck of the woods down in Texas, driving from El Paso to Dallas. There's not much in between those two places. So, but yeah, it is exciting. And, the building blocks of autonomous are significant, and safety is a big one. And the tools that you use to be sure that you're checking everything around that vehicle, what's in front, what's beside, what's behind, those are going to be critical. And so you have to use a lot of different things in order to see all of that.
Yeah.
So,
And the redundancy in the systems that's necessary just to make sure that they're 100% fail safe. It's almost mind-boggling.
Another favorite part of the seminar for me, Steve, was when we had a dealer panel up on the stage, and it was so telling, and really there were different perspectives on what's happening in the market from a couple of the dealers that were on stage, and I would really encourage anyone who can get their hands on that session to do it, because it was fantastic. And one of the dealers was speaking specifically to the fact that her market is mostly vocational, where she's at. And both of them really, though, were focused on the fact that getting equipment, getting trucks was not easy. And yet you see this year-over-year improvement. There must be a lot of people that want to buy trucks that can't buy them right now. And that's an interesting dynamic.
Yeah. The industry's been constrained, right? So
Yeah.
with all the supply chain challenges that we've had over the last couple of years,
Yep.
when we think about demand for vehicles, you have this core level of demand that we call replacement, right? Trucks wear out, and so they have to be replaced. And it happens on a pretty regular cycle. Many of the fleets have been denied the opportunity to replace at least at full levels.
Yeah.
And so with multiple years of below replacement production and sales, we've got pent-up demand, right? And that's exactly what the dealers are talking about. And so they're not able to provide all the trucks that their customers need. Now, we're making progress on that. We've got a lot of the supply chain challenges behind us. They're not all gone. In fact, there was just, I think, about a month ago, one of the OEMs had to take a week down because they didn't have sufficient parts to build trucks. So, once again, we're not out of the woods. But hopefully we've drawn a pretty good circle around. These are the components or these are the parts that are an issue, and they're getting special attention, I'm sure.
No
so
doubt.
that we try to keep those lines up and keep the units coming. But that's the progress that we're making. But because we were in a situation like that for an extended period of time, you can't just snap your finger and fix the problem overnight, right? It's going to take time to work through that, and it's going to have to happen in conjunction with the business cycle at the fleets, right?
That's right.
So if the fleets are seeing slowing freight growth or even freight contraction, and rates are coming down, so are revenues, so are profits, so is CapEx.
That's right.
So it'll all sort itself out. It's just a matter of time. It always is. I guess that's why people come to the seminar, to hear what that timing is expected to be.
That's
or at least one of the reasons that they come. But,
no doubt.
the other observation that I had from that panel was asking the dealers, kind of compared to 2019 and today, where are you with respect to sales? And they kind of said, well, we're in the same place. And the questioner pushed a little harder and said, if you didn't have those restrictions, how much would you see your sales increase? And we got some pretty interesting answers. 76.2% of all statistics are made up on the spot, and so one of the dealers said 5 to 73%, which was hilarious. But the other one said very candidly 50%. So a pretty
it's sizable,
pretty big increase from where we sit today. So
no doubt.
if we could do that overnight, we could probably get that pent up demand all sated in a hurry. So. And that's actually one of the things that's making this cycle really exciting, is because the OEMs have kind of changed up a little bit how they open the order boards and how they're letting those orders out. We're really not seeing an opening for 2024 yet. I think Kenny showed this morning that we've got 12 or 13,000 units slotted for production in 2024 at this point. That's not even half of a month of worth of production, right?
Exactly.
So in the next, probably with either with the September data or maybe the October data, we'll start to see that influx of orders. But I don't think it's going to be like the order season that we've traditionally seen. When they open the books, they open them wide open for the whole year, and you see a massive influx of order activity. I think we're probably going to see them open a quarter. And maybe that fills up pretty quickly. But they're gonna be very measured in their acceptance of incoming orders.
Well, and it'll be interesting to see ahead of January 2027. Emission standards are going to be more stringent, and how much the OEMs are going to be able to do with that mentality coming into 2024.
Yes.
Right? Ken has talked about this, and we could have historic pre-buy years in 25, 26, and I think we probably will. But they're going to have to get their manufacturing capacity up to snuff to fulfill all of the pent-up demand and pre-buy activity that's inevitably going to happen in that time period.
We've got a significant number of units in 26 already slated for pre-buy, and that's leaking backward into 2025. And that was part of an interesting part of the conversation this morning. The OEMs have a more aggressive forecast in place for next year, for 2024, than what we've got. Part of the reason that we believe that's the case is they have human assets, right? They've got labor now, and they don't want to lose that labor. So how do you do that? You can keep the assembly lines running at some level. So it's almost as if some of those pre-buy units might be leaking into 2024. I don't know. We'll see.
It can happen. Yeah, it can happen.
It would be an interesting exercise in the application of discipline in this industry that sometimes is not the most disciplined.
Oh my goodness. Yeah, it's been one of the challenges in the industry. The big builds create bubbles that ultimately cycle, and then we have challenges in the market. But and that was all the I will call it the normal conversation around production and whatnot. But there was some interesting conversation also around how long some of these electric vehicles are going to last, for instance, and what does the battery life look like, and what happens if I keep the truck for 15 years and the battery life is only 7? How are we going to address that? It was interesting, some of the concepts that are out there.
Yeah, it is. I mean, it's all, like I said, it's all new, and we're still kind of trying to figure it out. We've done quite a bit of work on trying to understand decarbonization, so not just electrification, but other powertrains as well. And one of the tools that we use to help us understand how vehicles might be adopted is a total cost of ownership model, or a TCO model. And admittedly, we're pretty conservative in that model. We assume one battery replacement during the usable life of the vehicle. And that usable life varies depending on the duty cycle. In the medium duty space, typically kind of 8 to 10 years is a good estimate. But then, much to the consternation of the used truck market, they're like, well, what do you assume for residual values? And as I said, conservatively, we're assuming 0 residual value. And yet, all of those models on a TCO basis say that today, that's a wise decision. That's a smart purchase. Go ahead and do it. So again, other challenges notwithstanding. So it'll be again, one of those things we'll have to watch the technology develop, because 10 years from now, the battery technology is likely to be different. So will it be backward compatible with the vehicles? Can you just drop that second battery and put a third battery and buzz on down the highway?
Exactly. And for lenders, banks and captives, we need to build products that work for the environment that is coming. And that's, look, I don't know that we'll be 100% doing all clean energy or financing all clean energy in the next 5 or 6 or 7 years. We won't be. And maybe we won't be 100% until way beyond the time that I retire. But we do want to build good products, lending products today and service products today that will meet the needs of the future. And one of those, when you think about batteries, one of those products would be a subscription product. We do that today with various technologies. We just have to get to understand the technology, know its useful life, and we do subscription financing. And that might be a solution for batteries, is subscription financing. But to your point, after 7 years, they may have a way better battery. And so that way better battery might not cost as much. And so the subscription rate goes down. Or because of inflation or whatever, it's the same level. Don't know. But it's going to be important for lenders to get on board with that. And if they're here, and they are, they're going to hear what the landscape is going to look like in the next 5-10 years.
Start to formulate your plans then adapt them as developments necessitate.
No doubt.
For sure.
So what about, we had at the end of the day, you gave your presentation on medium duty, right? And used trucks. What, in the course of preparing for that section of today's seminar. What was most surprising to you? I know it happens over time, but where has been the biggest surprise for you in those markets? First used and then medium duty.
Yeah, so on the used truck side, I'm encouraged because if you look at kind of the big picture on Class 8, so let's look not just at the tractor sleeper, but also tractor day cab and vocational.
Yeah.
And let's ignore vintage, age, mileage, right? Just kind of a big picture number, what's happening with the market. And the phrase that I've been throwing around lately is less worse. So we're starting to see the year-over-year declines get smaller, right? Which means we're on the mend. Now, arguably, part of that is because we're on the backside of that price curve, so the comparisons from last year are getting easier.
Yeah.
But we could just as easily see prices falling at a sharper rate today, or even staying flat, that would negate that observation and that behavior. So that was, for me, that's an encouraging thing. The thing that was probably the most surprising is that the volumes of used truck sales that we're seeing are showing some pretty good improvement. Year to date, through our preliminary July data, we're up almost 25% compared to that same period last year. And when you hear, again, headline news, all you hear about, well, not all you hear about, but the focus is trucking company failures and bankruptcies and drivers leaving the industry.
Right.
That's true, they are. But at the same time, because of the dynamics we've talked about, the diversification, different markets everywhere, you have drivers coming into the space,
yes, you
right?
do.
And it's buyers of used equipment, right? And that's, I think, what's supporting those volumes. The other thing that's kind of interesting, and I don't think a lot of people think about, is, we talked a little bit earlier about replacement for the new truck buyer.
Sure.
Used truck buyers, many of them, exercise that same mentality, right?
Yeah.
I buy a truck, I drive it for 2, 3, however many years, put however many miles on it. I can't keep driving it. I'm not going to drive it into the ground. So I need to refresh my used truck fleet, right? And because of supply chain constraints, because of the slowdown in trade cycles, they haven't had the inventory to choose from, and the prices have been sky high. And so now we're in a situation where we do have inventory to choose from. Prices are coming down. So it's a pretty good time to be shopping for used trucks and actually purchasing them.
No doubt.
Yeah.
And you see more and more of that operating that late model used truck, and you see some of the big fleets in the country. You talked about this, selling their own off lease units and whatnot, and we see that too. And those late model used trucks are actually very good trucks for numerous applications, including the one that they were just used for.
Exactly.
It's just that they're a little older, and those big fleets don't want to come out of that warranty or even be close to coming out of it. So it's still a great truck. And if you are able to get into that late model used truck as a small fleet, medium fleet, it's a great truck for what you're doing. But to your point, when they were trying to refresh and they were looking at paying $120,000 for a 4-year-old truck, it got complicated really fast. So we are seeing those prices come down on those units, and that's an encouragement. And hopefully, as the new truck inventory or production begins to present itself, we'll see markets sort of stabilize a little bit.
That's the thinking.
That'd be good for all of us.
That's what we're looking for.
Yeah.
Stability is a good thing. So
no doubt.
Which is actually a good segue to the second part of your question. So as I was putting together the presentation for the medium duty, what surprised me, and far and away, it's just been the resilience of the consumer. And so demand has held up much better than anybody thought, including me. So our forecast, it's almost embarrassing. It seems like every month, you're having to raise the forecast, and primarily just because of in-hand performance outperforming what your expectations were. And you don't want to get too far out ahead of your skis and say, okay, no more of these month-to-month increases. Let's just stick a stake in the sand and go with this number up here.
Yeah.
You try to play it a little bit conservative, and there's always the give and take between what's happening on the medium duty side versus what's happening on the heavy duty side. Lots of trade-offs taking place there. So,
Yeah, no doubt.
But yeah, absolutely, the consumer has just blown me away.
Yeah,
And elongated this cycle.
Yep.
I think beyond most people's wildest expectations.
Been very resilient.
Yes.
And we've continued to spend, and it's propped this thing up for a good while, and maybe possibly positioned us for a soft landing.
Yeah. In the presentation,
very soft landing.
in the presentation, I alluded to the fact that everyone was qualifying, their outlook as to the, what the landing looked like.
Yeah.
And I said, I'm not sure we're going to have a landing.
Yeah.
My sales forecast for,
Yeah.
for next year is up. This much, not a huge increase. Now, production, we've built some inventory and we'll draw that down to support the increased sales. But for all intents and purposes, this is a flat market, flat to slightly up market in the medium duty space for next year.
No doubt.
So,
No doubt.
yeah.
Yeah, that's a good thing. I mean, you basically have a whole segment of the industry that is, to Steve's point, basically just circling and staying level. And it's good to have that kind of measured stability in a portion of the market. Certainly, heavy duty OTR sleeper trucks are always going to be in that freight centric environment, and it's going to be cyclical to some extent. I can remember when GE Capital bought the company that I was working in, the transportation business I was working in, and somebody asked one of the GE executives, well, how do you feel about, cyclical businesses? And he said, well, we manufacture airplane engines, so we understand cyclicality. and that's a real key for lenders to understand that it's a cyclical business. And if you have a balance sheet that can stand it, and we do, as an example, you can do it, and you can continually provide liquidity to that market. And so but it's nice to have that stability in one hand while you're waiting for the rest of it to sort of come back around to good days, and that's coming. It's not that far.
Sawed a little away on a good day for a rainy day.
That's right.
Yeah, for
That's
sure.
right. Steve, I was just thinking about the dealer panel again, and Laura Parada was talking about some of the developments in legislation that will positively impact what's going on in trucking today. And you want to fill us in on a few of those things?
Yeah, I'd be happy to. So a couple of things that we talked about in that session, and she's actually the president of the American Truck Dealers, so it's a lobbying organization that supports the dealer body, and so that's why we had her on the dealer panel. She's spoken with us a number of times. A couple things that she was looking at. One is sort of a perennial favorite. Favorites might not be the right word, but a perennial issue, and that is the federal excise tax, which was actually established back in I think around 1920s to help pay for World War I costs, and yet it's lingering, over 100 years later. Right?
World War I, it's over, right?
We won. Yeah, it's all good. It's a 12% tax on the purchase price of a commercial vehicle and some other things as well. But it's largely a barrier, right? At a minimum, it's keeping buyers from being able to purchase more equipment. But it's somewhat of an arcane tax. And
funny story on FET. I'll just tell it here real quick. So when I was earlier in my career, we would do floor plan checks. We had the retail financing, the inventory financing, which is floor plan, and we didn't just sell the money or the loans or the leases. We also serviced them to a large extent. So I had a number of dealers on floor plan, and we would have to go in and do audits. And one of the things that we would have to audit for was FET.
Okay.
And back in those days, we would literally follow the money. We would look at the deposits and we would look at the checks and make sure that they, you know, the money was coming out of the account to pay for the FET taxes, and it's just so inefficient. You know, it's just so inefficient, and it would be so nice if we didn't have to do that anymore. Not only would it save us 12%, it would help absorb some of the other expenses that are coming into play, and I know Laura's doing a good job in helping us get that ball over the goal line, but we could really use that.
And I think we're making some progress.
Yeah.
We've had lots of agreements in principle with varying legislative bodies and organizations within the industry, but I think we've moved that ball further down the field. So don't want to declare victory yet.
Yeah.
That's not the point, but we're certainly making progress and moving that effort in the right direction. It's particularly important when you start to look at the cost differential between conventionally powered trucks, you know, diesel-powered trucks, versus alternatives, because the alternative fuel vehicles often carry a much higher price tag, and you're paying the FET on top of that price increase.
Right.
So if nothing else, if we could just get it repealed for alternative fuel vehicles, it'd be a victory. So the industry's working on that, and hope to see that we make some progress. A couple other things that they're working on it's kind of technical, it's tax related, but how dealerships are taxed for their inventory. There's a concept called LIFO, last in, first out, which means the most expensive one is the one that goes in and out. So it's unfortunately it's unfavorable to the dealers themselves, and so trying to get that addressed, and that's relatively new. Initiative, new effort, so something we'll have to just kind of stay tuned in to see how things move along. But the last piece that Laura talked about was probably the most interesting and also probably the most controversial, and that is just the mandates themselves, and meeting the emissions mandates, meeting the alternative fueled vehicle either purchase or operation quotas that are being put in place, not just at the federal level, but in California and in the carb sympathetic states as well. And it's kind of interesting. The U.S. Or North America is not as progressive as folks are in Europe. In Europe, the legislation has turned around. There are actually incentives to buy the more environmentally friendly vehicles. We have some of that type of stuff on the books, but largely what we see is the legislative bodies dictating the technology, dictating the solution, which comes with a dramatically higher price tag, and thereby penalizing the folks that adopt it. Laura had a great suggestion. You know, why don't we take a look at the fleet that we've got in place today and come up with a scheme where we can start to more quickly retire the older, more offensive from a emissions perspective equipment, get it out of there. Somebody from the audience yelled out, "Cash for clunkers." I don't know if anybody remembers that program. I actually took advantage of that, and unfortunately my daughter still hates me to this day because of it, because it was her car that I got rid of, and it was a perfectly good car. There wasn't a thing wrong with it, but it was fuel inefficient, and we traded up for something that was more modern and more efficient. So
I think it was was it the Port of Long Beach that had a big program back in maybe 2008-ish, 2009, that was remarkably successful. People were just bringing in their older, combustion engines in for a more a cleaner combustion engine, but at the time they were they made it easy for an operator to turn in that older unit in favor of something a little newer, a little cleaner.
Exactly, modernize the fleet that we do have as opposed to trying to radically change the future direction. Or do both, but do them with moderation, right?
Exactly.
So very interesting points of view and some takes there. So we'll see if any of that gets traction.
Hey, lots of great ideas from this seminar, and as always, I have thoroughly enjoyed my time in Columbus, and being with you, it's been great.
Well, I'm glad to have you here, and can't wait until you guys can make it back again. So
looking forward to it. Thanks, everybody.
Take care.